let's start with the next module, which is module 4. The topic that we have is pay system. Now, pay system, you must be aware what is pay system. It is the entire system in which we provide information to HMRC, and HMRC also shares the information. So when we use the term pay system, it means the entire system of HMRC. Okay, only pay term is taxation. For taxation we use. Okay, so we will learn the topics process of the pay system, the online pay system for employers, like what will be the registration, what is important things, applying the employment allowance, payments at employment termination, explaining the retirement scheme, work effectively with RTI computerized payroll system, then correcting payroll errors. These are some topics that we'll learn around the pay system and HMRC rules. So the first topic, the process of pay system, pay as you earn. Okay, PAYE means pay as you earn. So pay refers to income tax, which is deducted from your salary before you receive it. Okay, most of the employees pay income tax in this way. The money is sent to HMRC by your employer at source. Okay, meaning directly from your pay before it reaches your account, like we do in India also. Right. So national insurance and student loan repayments may also be deducted in this way. Okay, so these are also deducted in the similar way. An employer will have to operate pay as part of payroll. Pay is HMRC's system to collect income tax and national insurance from employment. An employer does not need to register for pay if none of the employees are paid pound 123 or more a week. Can you relate this now? Employer doesn't need to register with pay, which means with HMRC. It is not mandatory. Still they can. Okay, for their benefit they can, because they are not going to submit taxes and NICs to HMRC, and employee will not even get the benefit. Now you can relate everything, right? So there will be no deduction. There is no connection with HMRC at this point in time. But employer has to keep the record of everything. Even if they do not register with HMRC, they have to keep all the records of employees' income, whatever they process every month. Okay, get expenses and benefits, have another job, or get a pension. Okay, so if an employees are paid only less than 123 pounds a week, or only get expenses and benefits and have another job or get a pension, in that case it is not required to be registered. Okay, why pension and why another job? Because these are the reason where employee may earn less than 123 pounds a week. That is the reason it is mentioned here. Otherwise, the salary will be higher side only. Why employee will receive 123 pounds or less? In these cases only they will receive less. Or if employee is a part-timer or very less hours they work. The employer must, however, keep payroll records. As I said, they have to keep all the payroll records and they have to share the pay slips and everything. When paying the employees through payroll, the employers also need to make deductions for pay. Okay, that is pay means at times we'll use the term as all the deduction which goes to HMRC, okay, along with others. So what kind of payments you will see in UK? Commonly, it is salary, wages, if it is a hourly wage or any kind of wages paid on daily basis. Then bonuses, statutory sick pay, maternity pay. These are some examples. Then deductions, what you will see, tax, national insurance, student loan, repayment, pension contributions. Pension contribution is the employer contributions, okay? That is company pensions. If the employer has to operate pay, they can choose how to run their payroll, okay? If employer registers with pay, operate pay means they register with HMRC, okay? Paying a payroll provider to do it. They can hire a payroll provider to do that payroll job. So they will share the details every month if there is any changes or any additional things, and payroll provider will do the payroll run every month for the organization, or else they can do it by themselves using a payroll software. It is employer's choice, whichever way they find it convenient. You know, the payroll providers are there who work for companies. So steps in setting up payroll. Now, if the employer decides to run payroll themselves, they need to complete certain tasks to pay the employees for the first time. If they are, if this is a new company, okay, first time what they will do, they will register with HMRC as an employer. Okay, get a login for Pay Online. As I said, HMRC will give a login to all the employers registered with them. Okay, this is called as Pay Online account, and the number they will provide, that is a unique ID, it will be called as Pay Reference number. Okay, it will be the same login ID password. Choose payroll software to record details. Which payroll software should be used, it will be a company decision based on their requirements and convenience. Collect and keep payroll records. Tell HMRC about your employees. Collect and keep records means we take from HR team the details of the employees and we keep it. Tell HMRC about your employees. This is a FPS that we run every month and EPS. Record pay and make deductions. Report to HMRC on or before first pay. Okay, so on first pay, as I told you, HMRC gives that uh,
Yeah.
relaxation and more time for the submission of pay. Okay, that is the FPS, because at times the registration may take time and the login details may reach late to the employer. So they give one more month. Okay, that is they have extra month to submit the FPS only for the first month of registration. Pay HMRC tax and national insurance. After submitting the details in FPS, then if you remember next month, by next month 22, 22nd of next month, pay that amount.
Payments.
The online pay system for employers. As an employer, you need to use HMRC Pay online service. You need to use it for the following. Check out what you owe HMRC. Okay, mainly um, we use it for multiple purpose like tax codes and other details also, employee notification. But the purpose behind this portal was so that employers can see whatever they need to pay to HMRC. Okay, that is the main purpose. Because why we are connecting with HMRC? Because we are paying taxes to HMRC, right? HMRC is the governing body, so we have to make payments to them so that we are not non-compliant. Okay, so main purpose was this, but we have multiple activities that we do. Okay, check what you owe HMRC. So you can see the balances. When you report FPS, HMRC reviews the amounts, as I said, and they will update in your online account so that you can see whatever you need to pay to HMRC. If you have missed some payment last month, that also you can view the missed payments. Okay, so whatever, no, you will see the month. Okay, which month you have missed. For example, you have missed, you have paid every month, only one month you have missed. For example, June month you have missed to make the taxes and pay, sorry, taxes and NIC. So you can see missed payment where it will be mentioned that July payment and the amount is missed out. Okay, and there will be some interest if it is accumulated. You will see the
Oh,
interest and penalty also. Okay, anyways, it doesn't get missed out so easily because HMRC keeps on sending the notifications or reminders. Okay, in the HMRC online account. So it is important for the employer to check those notifications. What are those notifications? Then you can see your payment history also. As I said, whatever you have made the payment, and if there's anything pending, that also you can see. You can see a red mark or orange color in the warnings. Like we have a warning icon that you can see in the pending month. Okay. Then access tax codes. As I told you, you can access tax codes anytime in that portal you want. Like if you want previous history also, you can download that as well. Okay. Beyond some limit, you cannot download. Like 2 3 years back, you cannot download, but you can download previous months or in the financial year, you can download the tax codes. Then access notices about your employees, any kind of notices if HMRC has sent to us, like student loan start and deductions. And if you remember the national insurance numbers also, where we send the national insurance numbers to HMRC, those kind of notices, or if there is anything specific, that also you can see it from HMRC. Appeal a penalty if there is a penalty charge, okay, on the late payment or late submission, but you think it is not a late submission, it was you have already informed HMRC, or there was a technical issue from HMRC on which the penalty should not be charged, or if the penalty is charged in a wrong way. So you can appeal a penalty in HMRC online account. Okay. So HMRC will review our details again. If still you do not get that service, then you can go to court. Okay, directly go to court.
Oh, so even if it is a government body, we can question.
Yes, we can caution. It is not like if you have what happens at times, like as I said, if this is the new employer, okay, first month you have received registration details late, right?
Mm,
So you cannot submit FPS on time. So what you have to do? You can keep HMRC informed also at times, like it will be late submission due to so and so reason. Okay, this is one reason. There could be some other reasons also,
mm,
wherein if, for example, HMRC system is not working properly on the last day of submission of FPS, maybe
mm,
there is a, connection issue. Like we receive in India also, the servers are slow, right? So you're not
mm,
able to submit on last day. That is the reason people submit early.
mm,
That is
mm,
1 or 2 days due to this reason also. So
mm,
they can they can appeal a penalty. Like it was, this was the problem. We were ready. We have
mm,
this logs also. You can see the logs that it was failed due to
mm,
your system issue. So there could be a reason where it is genuine, wherein it was not a employer's mistake. There they
mm,
can appeal a penalty. The best way is to always discuss with HMRC in advance if there could be a reason due to which you have to delay the payments or the reports, okay, due to which it will be delayed. But if you have not informed and HMRC is also not aware, they may charge penalty as default. Okay, that you can appeal, and HMRC will review that, can provide the reason, and we'll see in future. There is, I think, module 11 or 12 wherein we'll see these details, like learn more about this, how a penalty could be shared, or how a penalty is charged by the HMRC. Okay, then get alerts from HMRC. As I said, if you have some payments due, uh, uh, even alerts like for the future payments also you get alerts, like your pay date is 25th. Okay, so you may get an alert on 22nd that submit your FPS on 25th. Okay,
mm,
so these kind of alerts also you can get. Send expenses and benefits returns. As I told you, expenses and benefits are reported at the year end separately. Then you can send this through online account. We don't have access to any HMRC online dummy because there is nothing like that dummy
mm,
login, but we have taken some screenshots to show it to you how it will look like. So this is the login page you'll see of HMRC website, the government gateway user ID, which is the pay reference, which should be given by HMRC. Yeah, and then the password, it could be reset also. There could be same kind of details for employees also. Employees account, they can also register with HMRC for their personal accounts. Okay. Most new employees get a login when they register as an employer online. If they do not have a login because they registered in a different way, they will need to enroll for pay online separately. Okay. So most of the new employees get a login when they register, as I said. If they do not have a login because they registered in a different way, which means manually, they have done a registration visiting the office and
ah,
done the registration manually, then they will get the manual copies from HMRC, but they have to online they have to enroll online for a pay account. Okay, separately they have to request that account by sending those details they receive manually, so they will receive a pay online account separately. Okay, how you enroll depends on whether you already have an online account for other taxes. Okay, if there is an already account for some corporation tax and self assessment that employer does, okay, then at that time they can see if they can merge that account with the online
mm,
pay account. Okay, so already have an account. So if there is already an account, sign into your account and select pay for employers from the list. So there could be some organization, they already have multiple entities. Okay, so they can register for only one login wherein they keep on adding their entities, like a Tata Group, for example. Just for example, if they have multiple entities like TCS, Tata Motors, they keep it as entities. Then what they can do, they can keep a login as Tata, and they can keep on adding the employers inside it. Okay, so they will get multiple reference numbers for Tata. There will be one login ID, but there could be a different registration numbers if they keep on adding the employers inside. Okay, so they can whichever employers details they want to see, they have to select that employer and then do the submissions and check details. Okay, every time. And there is an if the employer doesn't have an account, employer as a enroll as a new business account holder and select add a tax to your account. Okay, on the business tax summary page, this is the step when we do the online registration. Okay, you will then be able to add pay for employers. Okay, add a tax to your account, which means add a tax means the same like we are adding an employer. Okay, then we have to fill the details of the employer and do the registration. Now this is one of the benefit, okay, that employers get, which is called as employment allowance. Okay, now what is this benefit, we'll see. So employment allowance allows eligible employers to reduce their annual national insurance liability by up to pound 5,000. Okay, so which means the national insurance contributions that employer make to HMRC, that could be reduced by 5,000, maximum 5,000 in a year. If they are eligible for employment allowance, all employers doesn't get this. They normally who gets it, uh, who is uh, doing the uh, business into service, okay, and good selling. We'll see that in detail in upcoming slides. But for now, you just know that we get this benefit. It could be maximum 5,000, not more than that in a year. It could be less also, like 3,000, 2,000, depending on the eligibility that HMRC will decide the eligibility. Being an employer, we have to check if we think we are eligible for employment allowance or not. Then only we'll request it from HMRC. If we think we are eligible for employment allowance, we'll inform HMRC and HMRC will give us that discount. If we claim that allowance and HMRC gives us by mistake without checking, and they give us the benefit, later on they found that we are not eligible for employment allowance, then we have to pay it back. HMRC will uh, deduct the deduct the discounted amount later on. Okay, so we have to pay it back. So it's better we check first if we are really eligible or not. Okay, you'll pay less employers class one national insurance. Okay, not employee one. Employee, because these are paid by employee. We are deducting from employees. Only the employer's allowance will be less. Each time you run your payroll until 5,000 is gone. So if you have claimed employment allowance, so every period you are getting some discount, for example, like 500 in 1 month, okay, 2,000 in some 3 months. That could be distributed also, and you can, if you are claiming it very late, for example in Jan month, which is already 10th month, right? So at that time maybe you can get maximum 5,000 full amount. Okay, but if you claiming from start, maybe it will be distributed. It will start with a small amount because this is the first or second month. Okay, but it will be till 5,000, then it will stop. Okay, and if you are eligible till 5,000, if you are eligible till 3,000 only, you get till 3,000 only. Okay, you can only claim against your employer's class 1 national insurance liability up to a maximum of 5,000 each tax year. You can still claim the allowance if your liability was less than 5,000 a year. As I said, you can also be eligible for lesser amount, but you have to claim it. That is fine. If HMRC will not give it to you
Yes, sir.
upfront. So this is the eligibility criteria. Okay. So am I eligible for employment allowance? So these questions should be yes. Like this questions answer should be yes. Okay. Do you have a business or a charity run? Both business and charity run, like if there is a NGO, they are also eligible for employment allowance. So if the first answer is yes, then we'll go ahead. If it is not a business, then we cannot claim employer's national insurance. Do you have at least one employee? So there should be employees, okay, for whom you are contributing employer and I. Otherwise, if there is no employee, whom you will not be able to contribute to employers and I, right? You will be just paying the taxes to the employer if it is a single business. Are your national liabilities in the previous tax year less than 1 lakh pounds? This is the last question which should be answered. If the national insurance liabilities is more than 1 lakh, okay, they are not eligible for this employment allowance. So what you mentioned, that also makes sense, that if
Yes.
the liability even five less than 5,000, okay, you have to claim it. If you answered yes to all of the above, you may be eligible for the employment allowance. You may be eligible. So what you have to do, you have to tick on employment allowance option when you submit FPS. There is an option in FPS, uh, employment allowance eligibility. Okay, so you have to tick this option. Otherwise, HMRC will not give you automatically. You have to claim it. So if you forget about it, there is also a reminder which comes on your online account that you have not yet claimed the employment allowance. There will be a reminder. So you can ignore if you think you are not eligible. If you are eligible, you have to click on yes. Okay. Claiming employment allowance, go to the employer menu on the home page and select the correct name. That is the employer. As I said, if you have multiple employers, select the correct employer, then you claim it. It may be possible that all the employers are not eligible. Okay. Select the option change employer details if you want to change the employer. Okay. When you select one employer, so in the portal, then it will ask you, do you want to change the employer? You have to click on yes. Okay, because then the system will refresh, the portal will be refreshed and you will be able to see the details of that employer only. So in the employment allowance indicator section, choose yes. Okay, on the portal you have to select this yes, and then it will be reflecting in your FPS when you submit the FPS. Okay, now claiming employment allowance, this is again related to the same topic. Do state aid rules apply? There are different rules. I can show you later these rules. Okay. So there are some rules applied when you run a special kind of business. Okay. Special kind of business means if there are services, okay, or you sell goods, okay, then answer yes and select appropriate business sector. There are multiple business sector like it could be aqua related like fisheries, and there could be some construction related like road transport. So these are some services, okay, and whereas the business like the fisheries is for selling goods. So these kind of business have some state aid rules, okay, under which they get some benefits. Okay, otherwise if these are not the business sector, you have to select no, then the stated rules do not apply for those businesses because they still get the employment allowance, but there are some stated rules which will not be applicable. I'll show you those rules also because it is not mentioned here in the modules. I'll show you on the HMRC website. Okay, send a normal EPS. Okay, for both of them. Payments at employment termination. So what will be the termination compensation that a company does? Like if there are two types of termination. One is normal resignation where we receive from employee, and another could be a termination which is called as dismissal, which will the employer will do. Okay, they will remove some employee by due to any reason. Okay, so that could be one other termination. So when employee loses job because of employer's decision, employer has to compensate something. Okay, they have to pay extra amount because employee has not resigned. Employer is terminating the employee, and there could be possible that it could be possible that employee will not have job after getting removed from this company. Okay, for some months or so, that is a kind of a compensation they have to pay. Now, what are these? Okay, Termination pay is what employer pays out to a terminated employee when they are dismissed from their job. Okay. The other amounts that we do during registration, sorry, resignation, like the balance of holiday, earn leaves, this will be normal. It is same for everyone, but there will be some additional things that will pay when we dismiss someone from the job. Okay. Termination pay in the UK may include compensation for a notice period. Okay, like we do in India also. If employee is not serving notice period, what we do? We deduct their amount from the final pay. Similarly, if we remove an employee early before, we have to pay the notice period, right? We do in India also that thing. So if it is for our benefit, we ask them to leave on immediate basis. Could be any reason. Okay, so now they have to search a job. Okay, why we have notice period? It is for benefit of both employee as well as employer. If employee resigns, okay, employer has that assurity that 2 or 3 months this employee will work till the time they find a new employee. Okay, so that will be not a problem. That is the reason there is a notice period. Okay, similarly, employee, if employee has been removed, okay, so they can also have a notice period wherein they get some time to search for a job. Okay, so they can say that we have 2 months notice period, I can search a new job, that's fine. But if they remove immediately, they will say, how do I earn, how do I pay my bills for 2 months, right? So that is one of the reason this is a compensation. Now extra pays like holiday pay or other contractual perks will be paid as normal, as well as any wages owed to the employee for hours worked. Okay, these are normal salary that we have to pay, normal compensation we have to pay. So these are some normal payments, but we'll see the terms that we use in UK. So pay in lieu of notice. I'm not sure if you've seen in India. So this is the payment, which is a payment code we use to make the notice period payment. If it is for 2 months, then we'll make the notice period payment in pay in lieu of notice, so that even employee comes to know, okay, this is for my notice period. Okay, then ex gratia settlements. What happens if employee denies? Okay, if employee says, I'll not, uh, like I need some more compensation for losing the job. So this is out of normal settlement, which is calculated based on the actual elements. Like notice period, we already have that element, and we have that policy, how much we need to pay. Okay, but for ex gratia settlement, it is something ad hoc. Okay, which could be agreed between employer and employee, that you pay me 10,000 pounds. Okay, then employer will say we cannot pay 10,000, we'll pay 6,000. Okay, so this is kind of a settlement where employee will go out of the organizations with a smooth discussion, not a difficult one. You understand? Mutual understanding, mutual agreement and understanding. Okay, then redundancy payments. So do you know about this redundancy payment? Have you heard about it? So this is something that we also pay, which is a kind of a severance payment. Okay, I'm not sure severance payment if you have heard about. So this is based on the service. Okay, so redundancy payment is paid if employee is working for more than 2 years in the organization, then they get eligible. Now, based on their length of service, they get this payment. If it is 5 years, they get the calculation based on 5 years. The
Oh.
maximum is used 10 years. If an employee worked more than 10 years, then it is a cap of 10 years. They will not calculate more than 10 years. Okay, so we'll see that little more explanation on it. And one more thing. So redundancy payment, uh, 30,000. Okay, 30,000 pounds is non-taxable. Okay, more than 30,000 if it is paid. So 30,000 will be paid as non-taxable and non-enable, and about 30,000, whatever is the amount, will be taxed. And if it is higher side, okay. If it is less than 30,000, so entire amount will be non-taxable for the employee. Okay. So most UK employee, this is also one of statutory payment. Okay. So most UK employees who have been in their positions for at least 1 month are entitled to a notice period when their employer chooses to let them go. Okay. You can choose to work around the termination notice requirements by using pay in lieu of notice arrangements. And this is also in the contracts, like we call offer letter and appointment letter. UK people call that contract of employment. Okay, so in that it is always mentioned. Uh, like in some organization they do not mention, but there is the policy they have to pay. Okay, but that happens in India. I've seen in my company it is not mentioned. I think I have to check again. But in UK they have to mention everything. It could be missed out. I am not blaming that. It could be missed out because this is not in some organization they do not lay off so easily, but it happens. These arrangements will pay out a lump sum to terminated employees equal to or exceeding the wages that they would be entitled to or for the required notice. Okay, so if they are eligible like to work for 2 months more and they are not allowed, then they have to receive, they have right to receive that 2 months notice period. Okay, so that they can use that salary till the time they find a new job also. That is also one of the reasons. Now, ex gratia settlements, as I said, employers who want to dismiss an employee quietly and peacefully often use monetary incentives to gain their cooperation. Okay, mutual agreement, as you mentioned. These goodwill settlements are considered mutually beneficial for the company and the departing employee. Employer also gets that benefit that employee goes smoothly. They don't need to do any kind of hassle or any kind of case filing with lawyer involved. They have to do a smooth process they can do. So ex gratia settlements can be an attractive option for employers looking to part ways in order to avoid a grievance or time consuming corrective action, as I said. Okay. Redundancy payments. Okay, sorry, it is capped to 20 years. My mistake again. Okay. Redundancy payments provide an entitlement based on the employee's work history, wages, and age. Okay. This age, what you mentioned, it is just for the calculation purpose. Okay. It is not for the eligibility criteria. Okay. So entitlement based on the employee's work history, wages, and age. Okay. That serves as compensation their position when their position is terminated due to redundancy. Okay. So it is completely on HR policy how much salary maximum they will consider. Okay, if the employee is salaried very high, so they can also cap that as well. Like this will be a redundancy amount for each year of service. But normally they take the base salary. They have to pay the base salary of the employee for 1 year, 1 month base salary. For 10 years, 10-month base salary. Okay, this is normally the straightforward calculation is done. But if there is any age factor involved, like employee is at the retirement age, then maybe the criteria may change. But it I don't think it will change. There are mainly two eligibility only. Okay, minimum 2 years on the job to qualify. Okay, minimum 2 years if employee has worked, then it is standard in UK. Okay, there is not it is not based on the employer that if employee works for 5 years then will pay. No, it is minimum 2 years, and it is a kind of statutory payment. HMRC has made a rule for this. So let's understand about retirement scheme. As I explained you, there are two types of pension. One is through NIC, which is state pension. Okay. Yeah, that employee will receive during retirement directly from HMRC. Now the other one is workplace pension. Okay, workplace pension is a arrangement uh, done by the employer. Okay, so workplace pension is a way of saving for retirement that is arranged by the employer. So it means it is not contributed by employer, but contributed by employer and employer both. Okay, but an arrangement is done by employer so that they choose the best retirement scheme for their employees so that they can contribute and take the benefits in future. Okay, now why these kind of double pension, you'll think, right? Why we are enforcing employees to contribute into workplace pension? Because one of the reason I know, because the expenses in UK is very high. The bills and house expenses, the bill payments mainly, it is very high because it is a cold country that um, uh, without heater in few months you cannot survive. Like There are room heaters everywhere in all the houses. So when people retire, okay, after retirement they receive pension, that is state pension, and at times it is not enough for them to survive on this, like use the bills, sorry, pay the bills of the gas, and because it runs on gas, mainly the heaters are running on the gas. Okay, they have electric heaters as well, but it is very high expense, so people do not use it at times. Now what has happened, if you see the death rate amongst the old people, old residents, it is due to cold. They cannot use heaters, and due to cold there are a lot of people who dies. Same in Canada. Okay. So that's the reason the state pension at times it is not enough for the employees. So what HMRC has done in 2013, if I remember, okay, they introduced the automatic enrollment scheme. Okay, earlier there was private pensions, that is company pension, but it was not mandatory for employees to contribute. So what in 2013, what uh, government did, this they asked employer if there are some criteria like age should be 22 and above, employee's age, and then salary should be 10,000 pounds and above per annum. If these are the scenarios, please auto enroll the employee into the pension, that is the company pension. Whenever employee joins an organization, check these criteria. Employee salary should be 10,000 pounds and above per annum, and age should be 22 and above. Auto enrollment, auto enroll them means they do not get an option to choose for the deduction of pension. They will be auto deducted pension start of the first month or next month based on the auto enrollment. This is called auto enrollment process. Okay, so
Okay.
workplace pension is related to auto enrollment process in UK. Okay,
Mm,
then later on, if employee wants to opt out, that is fine. Okay, what happens if you ask someone, do you want to contribute into LIC?
mm,
Where people will say no, right? Right, but LIC, why? Because earlier we never had this kind of options, mutual funds and other funds. So LIC was the best option for normal people because they cannot break their head in investing in share market and earn more profits. So what normal people, middle class people did, they invested in LIC so that in retirement they get more benefit, pension plus LIC, and they can survive.
mm,
Just a similar kind of concept. If you ask someone, do you want to contribute to company pension? They will say no. Why? I'll do my saving on my own,
mm, mm,
right? But what is the benefit that people get here? Then an employee will also ask, what is the extra that you're giving me? I can save myself also, right?
mm,
So what
mm,
happens? And in addition, what government has done, that employer will need to also contribute some part. Okay, so if employee contributes, employer also contributes. So what happens? It doubles the benefit, almost doubles, not exactly double. So
mm,
what is the minimum percentage now? Earlier it was less, now it
mm.
is 8% in total. Okay, 5% employee has to contribute, and 3%
3%.
employer has to contribute minimum. Okay, not less than that. Now this is a new rule. Earlier it
Mm,
was 1 and 2% when it started. It was very small scale,
mm,
but it is mandatory for employers. All the employers, whenever there are new joiners, for example, 30 new joiners, so they will check 30 new joiners details, and they will auto enroll, auto deduct pension. And when
mm,
employee comes and ask, then they can say that this is auto enrollment, and they can opt out. But some employees, we have to, the HR explains it. Okay, this is
mm,
auto enrollment, but it has a benefit because employer is also contributing for you. So some employee may say, okay, that's fine, that's good, let's continue. Okay, so if employee wants to increase, that is fine. They can increase also from
mm,
5% to 8%, 10% also they can do. But
mm,
it is not mandated for employer to increase. They can
mm,
minimum keep it 3% only. But mainly employer, what they encourage this. Okay, if
mm,
employee is contributing increase amount, increase percentage, then they also increase the percentage to some extent. Okay, which is
mm,
called as matching contributions. Okay, if employee does 8%, so may employer may contribute to 5 or 6%, they will increase to 5 or 6. So
mm,
1% or 2% depending on the scheme. Each
mm,
employer can prepare their own schemes, okay, or else they can choose it with the vendor also. Okay, that is pension provider also, they can do a contract and they can submit all the contribution to that pension provider. Okay, so it could be possible. If employee has that personal, okay, they already opted for a private pension outside the organization. That is like we do medical insurance. If we do not offer company medical insurance, we take a common one outside, right? So they can have it, okay? And they can opt out from the company pension. They can say that I already have a private pension, so why don't you contribute with me? So employer can contribute. Employer has to contribute to the private pension then of the employee, because she is not opting for company pension, but her benefit should not go up. So employer can choose how much percentage they have to contribute, like a minimum 3%. On top of it, if they have already connection with that provider, they can do a matching contribution. They can submit their contributions for that employee. So this is also a provision, but currently we are learning workplace pension. So the private pension is the next part. Okay. So some workplace pensions are called occupational. Okay. Some are called works, company, or work-based pension. All are same. Okay. These are all company pensions, which is not state pension. State pension is from NIC. This is completely different. A percentage of employees' pay is put into the pension scheme automatically every payday. Okay. So if you auto enroll someone, that is you start deducting 1 month automatic, then you have to continue. Okay. Till the time if employee says I want to opt out, then it is a different thing. Okay. In most cases, employers also add money into the pension scheme. It is not most, they have to, okay, because it is HMRC rule. Okay. Employees may also get tax relief from the government. Okay. So there
Oh,
could be schemes which is non-taxable. So that will be deducted before we charge tax. So it will reduce the taxable income. Like we have tax codes, tax exemption is deducted before we calculate the taxable salary, right? So there
mm,
could be some scheme which is deducted before we arrive at the taxable salary. So they get more benefit. So people will be happy. There are
yeah.
one benefit is from employer contribution also, and one is tax relief also. So at the end, um, HMRC's burden is also reducing, because if their residents are dying due to some reason, so
Mm,
they have to take some action, which is encouraging employees to do more savings. Okay,
mm,
and at the end, the HMRC's intention is also to safeguard their residents, right? So you are a criteria for workplace pension. Okay, you are an employer if you deduct tax and national insurance contributions from an employee's wages, which means you are an employer. Employer means you have employees. Then you can start the auto enrollment, and you deduct tax and national insurance because you are an employer. Okay, from employee. This is just to there is no criteria on how much tax you deduct or NIC you deduct. You are just an employer. That is the criteria. Okay. Otherwise, for whom you'll prepare the scheme. Okay. Employers have to provide a workplace pension scheme for eligible staff. That is the criteria. What I told you. As soon as your first member of staff starts working. So what is the criteria? £10,000 annual salary. Age is 22 and above. Okay. This is the criteria. Types of pension schemes you are in. Okay, that is something they can keep any kind of workplace pension. The main purpose is to contribute 8% to a standard pension scheme. Automatic enrollment or joint voluntary in a workplace pension. Okay, so automatic enrollment or joint voluntarily in a
mm,
workplace pension, which means employee join voluntarily, but we are not giving that option currently because it is automatic enrollment. Then
mm,
what happens? Automatic enrollment is done. Then
mm,
employee can ask, what is this? What is
mm,
this deduction? So we
mm,
explain the employee. Then it is employee's choice if they want to continue or opt out. That is the reason voluntarily is mentioned here. Okay. Earlier it was voluntarily completely.
mm.
After
Oh,
2013, this was introduced. This is the mandatory process, automatic enrollment. So
mm,
do process is a, I would not say headache, but is a
mm.
kind of headache. Okay, one is automatic enrollment and one is sickness. So
Oh,
this process you cannot run away. If you have more, if you have 40 to 50 new joiners every month, and
mm,
this is a headache. Then
oh,
employees ask for opt out and all. You have to check the criteria. So this is
mm,
something you have to do every month. You cannot miss this process.
oh,
And one mistake causes you a trouble of lot of corrections. Okay, then these are the criteria that I already told you. Okay, employers must enroll and make an employer's contribution for all staff who are aged 22 and the state pension age, which means the retirement age. So without after retirement, no one goes to invest in pension. Okay, so 22 to state pension age. Earn at least 10,000 a year. Okay, salary. Normal work in the UK. So it should be a UK resident, the employee. As we said, as we discussed about if someone is going from India to UK. So if they're working on long term, then they will also do this. They will also start investing in this. There is no option for anyone to for exceptions. They can opt out. They can state that maybe I'll be working in UK for only 3 years. That is not required for me. So that could be one of the reason they can opt out. So automatically enrolled. In this case, both employer and employee pay a percentage of employees' earnings into your workplace pension scheme. Okay. The amount depends on the type of pension scheme chosen by the employer. As I said, there could be 5 scheme also, 10 schemes also. Like based on the employer size, they may know that multiple pension will need it. And or there could be something like there were different pension schemes earlier. Okay, so when we go to 15 years back, okay, there was a different kind of pension schemes. Okay, that is called as defined benefit. I'll explain you. There are more details around it in the upcoming slides. So by the time you know that investment portfolios changed, like the kind of investment we got the SIPs now. Now we have the mutual funds wherein we can select our funds. So by like if we near like if we go in past, there were different schemes wherein we had less limitations on the uh, uh, like we can choose the kind of fund we can opt. Okay, so there were traditional pension schemes earlier. So what happens, it gets outdated. Okay, but might be some employees have chosen that, so we cannot stop that scheme, so it will continue for those employees till their retirement. So
So,
new schemes keep on coming. Okay, so it by the time it is we see that kind of schemes come. So what will happen, some kind of vendor will stop that scheme that no one can enroll now, like in LIC also. If you remember, there were some pension schemes earlier. Then in 1 year they stopped it. After 1 or 2 years people enrolled. I think, yeah, it was for 1 or 2 years or few years it was there, and then it got stopped. No one new member cannot join into that scheme, so it was only for who enrolled it. Okay, so these kind of schemes could be there wherein a new scheme will be introduced after 5 years. So the old scheme will still be there, but the scheme may change. Like there could be a taxable scheme earlier, but now they are not. Sorry, non-tax tax exemption scheme. Okay, now there could be a scheme wherein tax benefit is less or no tax benefit is there. So it could change. The kind of schemes can change. So there is a reason. Uh, what employer does. Okay, in automatic enrollment scheme, the contribution remains between pound 6240 and 50 to 70 a year before tax, based on your total earnings. Okay, so this is the capping. Okay, this is the capping beyond which 50,000 to 70. Above that, it will not go. Okay, the contributions. So what happens? Why you'll see this big amount? So employees have an option. Okay, whenever they earn a bonus. Okay, or a big earning like the redundancy. You remember redundancy? So some
yes.
employees, what they do, if they get redundancy amount, they ask employer to put it into the pension scheme as one of amount. Okay, entire amount. Understood? So earnings include salary. On these amounts, pensions will be considered like salary, bonuses, and commission, overtime, statutory sick pay, okay, maternity, paternity, or adoption. As I said, everything will continue as normal, even if employee receive maternity, paternity, like tax will be normal, NIC will be normal, pension will be also contributed, student loan will also be deducted. But the only thing is maternity pay and paternity pay is lesser amount. Okay, so if employee receives only statutory amount of later like 176 pounds, so it might not reach that level of taxation and NIC. Okay, because and even the student loan, it could be possible. Okay, so even tax will be very less if we calculate tax. Okay, so this is the, you see, from 2019 the rate got changed. Minimum employer pays 3%, and employee pays 5%. That is total contribution 8%. Okay, so we can stop here. And this is just voluntary enroll. If your earning is more than pound of 5,020 per month or 120 a week. That is, if you see, you can multiply. Uh, so here, what happens if your earning is more than pound 520 a month? Then your employer must contribute the minimum amount. Then only employer will contribute. There is a provision here, okay, towards workplace pension. If your salary is less than this, employer is not mandatory. Like it is not mandatory for employers to contribute to the pension scheme. Okay, if you are earning exactly this amount or less, then employers do not have to contribute anything. That is 3% is not mandatory. Okay. So the next topic that we have is regarding the retirement scheme. Okay. So there are few things which will confuse you because uh, maybe this is something different compared to India. Okay. So when can someone retire in UK? Okay. They can retire 80, anytime after 55th birthday. Okay. This is called early retirement. I'm not sure if we have in India. There is, I've heard early retirement, but I'm not sure if it is applicable for anyone or there is a genuine uh, case, then only we'll get it. Okay, I'm not sure about that. So at the age of 55th birthday, someone can take a early retirement also. Then there are some schemes in UK which is called SAUL. Okay, SOL. If you see the note, some SOL members may be able to retire after 50th birthday. Okay, so in UK there are, like, we also have old pension scheme. There are different pension schemes, right? So in UK also there are different kind of pension scheme. SAUL, then you see USS and NHS. Okay, there are different type of pension schemes. Okay, three pension schemes which is mentioned here. So retirement, if it is a SOL member, they can retire early, which is after 50th birthday. Okay. The earlier the retirement, the lower the pension will be. This is something common, that if they retire early, they get the less amount compared to what they will receive in full retirement. Okay. The other case could be, this is for normal cases. Okay. Early retirement. If in good health, it is mentioned. If in poor health, if there is a health condition, okay, sickness or any kind of critical illness, so they can retire anytime if they can prove, okay, that they are not able to continue the work or they will not be able to continue that. They will need a certificate or a proper documentation for that. Okay, so after service of at least 2 years they can retire. Okay, and whatever amount has been invested, they can take it. Okay. So if the college and the relevant person scheme agree the person is too ill to continue to work, okay, process must be started by referral to occupational health. As I said, it should be it should comply with the requirements. Now, if they retire, for example, in poor health, now can they join back? Okay, or if they were in good health and they took early retirement, then if they can join. So you see the same Amber one, the first one, with a new employer, they can join. If they are retiring from the college, there is no restriction on taking another job elsewhere. Okay, so if they are retiring from the college, there is no restriction on taking another job elsewhere. So they can work anywhere. Okay, so if they are not working, retiring from college, if it is a normal employment, they can take the retirement, but when they join another organization, they join as a contractor, not as a full-time employee. Okay, like maximum 5 years contract, 1 year's contract, 3 years contract, this way. Okay, the other condition, if in poor health they retired, now can they join back? So with the college, it is same. Yes, they don't have any restrictions. If but only with the prior agreement of department and must have a reduction in hours. If they join back the same college, they can join back. Okay, for example, they retired from that college and they took the pension benefits, and that stopped from there. Okay, so now when they join back the college, they can have the same benefit started again from as a start. Okay, but they cannot join as a full-time employee. Okay, they will have to take a reduction in hours, and also with an agreement of the department, that is the board of directors and everyone, then only that person will be able to join. Okay, then if they are joining within the with the college, then there is a restriction, that is they cannot join in 100% employment, that is full-time employee. They have two options. One is partial retirement, all schemes. Okay, take full USS, SAUL or NHS pension immediately. Okay, they can do this, or 1 month break between retirement date and return to work. If they've taken retirement, there should be 1 month break, then only they can join. And part time only, they can join only part time, maximum 0.5 FT, which means half hours. If they were working 40 hours early, now they can do only 20 hours. Okay, and they can reduce further also, but maximum only 20 hours they can do, 0.5. And then maximum 5-year contract only. As I said, they can work only on contract. Okay, and if there is a flexible retirement, so this is only available for USS and NHS scheme only. Okay, yeah. So if it is a flexible retirement, USS and NHS only. Okay, take between 80% and 20% of pension immediately. So they can take 80 to 20% in between any percentage. Sorry, 80 and 20% they can take, not 80 to 20%. 80 and 20%. Okay, no break in service. They can join after this retirement. Reduce hours to between, if they have taken 80% of the retirement fund, then they can join back as 20% FT only. Okay, like if they have 40 hours, so only 20% of that, only those much hours they can work. Okay? And if they can take in 20%, then they can work 80 hours, sorry, 80% hours. Okay? And minimum of 20% reduction is mandatory. Okay? That is 80% only they can work as maximum. Okay. Now work effectively with the RTI computerized payroll system. Do you remember what is RTI? So real-time information is the system that we use to report payroll details to HMRC, and also HMRC uses the same system to report details to the employer and employee. Okay, so now real-time information is a key government program which aims to improve the way in which employers submit PAYE information about their employees to HMRC. Okay, this is an improved way. As I said, we are sending everything electronically and in the format that HMRC wants, so that they can automate their database and record the details as per their requirement. Okay, without any manual intervention. So this is a kind of improvement, and this is also applicable for HMRC, wherein they can send the details very quickly, okay, to the employers, like the payment. If there is a tax payment or NIC payment pending, they can update within 2 days of what they receive from employers. Okay, they can update in the online account within 2 days that this taxation is pending. Okay, otherwise it was a manual process earlier, which used to take more time. That is the reason it is called as an improved way, and it has improved very at a very high level. I would say it is not a small improvement; it is a very big improvement. Okay, the RTI system is designed to deliver benefits to HMRC employers and employees as well, because we are able to capture all the data immediately, like tax codes, so that tax is also deducted right in the right way. We are not we are not delaying the tax code change. We are not delaying the statutory payments. Okay, we are not delaying the tax payments. Everything is on time, so it is benefiting HMRC employers and employees as well. These benefits include greater stability and reduced risk of over or underpayment of tax for employees. Okay, so these benefits include greater stability, and there is a less risk. As I said, if we keep on changing the tax code or if we delay the tax codes. So tax may not be correct of the employee, and even employee will not be happy. And even if you are underpaying HMRC will not be happy about it. Or same goes with the overpayment. Okay. So it helps employers at the end of year in dealing with levers and joiners and reduces scope of error and fraud as well. Scope of error and fraud means this is a term like uh, we are giving real time data to HMRC about levers and joiners on time. So HMRC also can record everything on time for them. Like for example, if they join in, they leave in between. Okay, so we use 0T tax code if someone joins without P45, right? So we are not giving extra benefit to them. We are deducting everything right in a right way. So in that case, this employee is a new joiner for us, right? For some other organization, this employee is a lever. Is that correct? So that lever data is going immediately to HMRC. So they can also revert back the tax code to us. So this employee may be a lever for another organization, right? So they can report the final amount of this lever to HMRC so that they can also share correct details to the new employer. So for HMRC, if there is any hidden tax, okay, that is a error and fraud for them, right? So everything is transparent because of RTI. It is very easier now. RTI provides the essential platform for universal credit, a major government welfare reform program. Okay, so universal credit is regarding the national insurance. Okay, that employee can apply. Okay, and even employers can get some benefit on the employment allowance. So there are some universal credit which RTI provides, and the employer and employee can take the benefit immediately. One is through employment allowance, and the employee can also get the benefit when the statutory leave is informed to the HMRC. So they can also take the benefit of national insurance credit. So under RTI, all employers require an internet connection, and RTI enables software to file pay online. Okay. So ensure that whenever you submit RTI documents to HMRC, you have a good connection. Like in India, I've heard about it that we face at times some trouble with the PF portal. It is slow, or some other portal. So that's the reason it is important for us to send the reports early, not at the end moment. So if we have the deadline today, at least try sending it 1 or 2 days early so that you know if it is not if it is causing a problem, so that you know in advance. And you can inform HMRC if you face some critical issues. So if you inform HMRC, then they may not charge the penalty or fine, or they may help also to reduce, so to resolve the error or issue. Okay, so it is very important. Employers with less than 10 employees may use HMRC's free software. Most commercial software may be easier to use. So HMRC provides a free software which works only for the company who have less than 10 employees, like maximum 9. If you see the term, the sentence, the second sentence, most commercial software may be easier to use. Like I said, if you pay more, then you will reduce this manual intervention, like leaves will can be recorded, and then you can get the automatic calculation of statutory payments. So these kind of things can happen in paid softwares. The last point that we had is RTI requires reporting at the same time as or before each salary or pension payment is made. Like if you pay salary, then you have to submit FPS by the payday. If you're making pension payment, you have to submit the FPS by the pension payment. Whatever you pay, you have to submit the RTI details rather than at the end of the each tax year. So it is not required to send at the end of the year. You have to report it each time you pay the employee. So there are changes to what is reported, or nil returns are made. Okay, so nil returns are made means if there are any nil returns, okay, that could be reported to HMRC right away. Or if there are, you're not going to pay any employees, remember, you can also report that to HMRC right away. There are changes to what is reported. forms such as P45 and P46. As I said earlier, there were some different like way of submitting to data. P45 is still same. The only thing is there were 4 forms earlier. Now we have 3 forms. Okay? And P46 has been changed to new starter checklist. It has been changed. The name has already only changed. So you remember for new starters, freshers, they have to fill starter checklist. It was earlier called P46. And now it is called starter checklist. And few year-end reports like P35 and P14 has been discontinued because we have RTI now. So we don't need to send manually. These were manual details that we used to send. Okay. So will not lead P35, P40, P14 forms to be filled with HMRC, although employers must prepare P45s and P60s for employees. This will continue. P45 is the leavers document that we send the employee when employee leaves the organization, and P60 is the year-end document. Like we have Form 16. Okay, it is same like for UK. So if employee leaves the organization in between financial year or before financial year ends, they will get only P45. They will not get P60. Like we received Form 16 in India. You remember? Like we will not receive anything at the FNF. Only the normal payslip, last payslip. Will receive at the year end Form 16 from that company. But in UK, they give the P45 right away. Okay, like an FNF, and which has YTD figure from April to the start of financial year to the last date of the employment. Okay, then they will not get P60. That ends P45. Okay, and P45 is the document, legal document. If employee doesn't leave till the last time of the financial year, they will get P60. Okay, like we have Form 16. Details will remain same. Okay, format will change. Details means there will be YTD salary, full year salary in P60,
Cumulative details.
and then there will be taxation. There will be statutory amounts, like if there is any statutory paternity payments made. So those will be also mentioned like in P45 and P60 both. Then there will be student loan amount if there is something deducted for the full financial year. So whatever goes to HMRC, that will be mentioned in that form. Okay. Under RTI, employers are required to make up to 5th April 2019 earlier year updates. You see, I just spoke to you about it. 2019 was the last year when we did earlier year updates. Then after that, it got stopped. We stopped EYU after 2020. That was the last year. Okay. EYU should be used to correct errors after 19th April following the end of tax year. Why? Because whatever you processed in the last month, mainly March, okay, last month of the financial year, you report everything by 19th. You remember? By next
Yes.
month, 19th or 20, because manually if you pay, you have to send it by 19th. If you pay online, you have to pay by 22nd. So that is the reason whatever correction you make after 19th, you cannot report it. It is already late. That if it was before that, we can send FPS at least, additional FPS, and correct it in the same year. But once 19 date has been passed, year end has been closed. It is considered year end. Then it is a previous year correction. Okay, whatever you send after 19th April. So during that time, we used to use EYU. Okay, so used to should be used to correct errors after 19th April following the end of tax year in which the error was made. Okay, if corrected by 19th April, then an additional FPS can be submitted. As I said, if it is before 19th. Okay, from 6th April 2019, that is the new year from 2019, HMRC no longer requires an EYU to correct errors. Instead, an additional FPS should be submitted with YTD figures. Okay, with the corrected YTD figures. Okay, for example, you have sent 20,000 as gross salary, but employee salary should have been 19,000. Okay, so you will now send it 19,000. So they will understand the 1,000 was extra. For year end additional FPS, remember you have to provide correct YTD figure. Okay, correct. Okay, instead an additional FPS should be submitted with YTD figures, which will override the original figures. You see this? Employers who use the back system for making payments to employees will have to file an additional report under RTI. So they just need to register the bank details, okay? Which bank we are using. So BACS is something that we do NEFT, okay? So we have to, because earlier it was check payments mainly. Earlier traditional method was checks, salary was paid through check, right? So when BACS was introduced, then this new policy was introduced that the bank details will be sent to the HMRC for RTI. We'll need to register the bank account. Okay, it is not compulsory for employers to use BACS. As I said, you can still use check payment, that is fine. But normally people use BACS. It is easier. You don't need to do manual intervention. Just upload the file in the bank and pay the employee salary on the
Yeah.
payday.